they realize what's going on and will get along a little better than what people think. Saudi Arabia, U.S., and Russia are all at record levels of output, and that doesn't seem to stop. So there are going to have to be some cuts, especially when you look forward and see the softening demand coming from economies around the world. 11.6 million barrels a day here in the United States. Inventories, which blew out so many expectations last week. How big of a part of the price decline story is U.S. production, Dory? Oh, I think it's the major problem for those abroad. You know, our break-even point, particularly in the Permian, is getting lower and lower every day. There's plenty of money out there. There's plenty of oil out there. The real problem is just infrastructure issues and being able to get oil to and fro and find enough employees and highway and whatnot just to get the production done.
Higher production is only a problem if you don't have the higher demand to take those extra barrels. How does global demand look to you, Dory?
Well, I think you're going to see they've cut the demand forecast the last 3 straight months. So I think you're going to see a lot of numbers this week on European numbers, GDP, CPI, unemployment, and they're all going to be soft. And they're going to be different than our numbers here in the U.S. So as those continue to soften, I think you're going to see continuing problems with the demand forecast for oil.
Bottom line, New Year's Day 2019, crude oil prices higher or lower than where they are right now?
I think you're going to see them in the $50 to $60 range rather than the $60 to $70 range. I just think it's going to be a lot harder for them to keep that price up with all the production coming out. And right now they're forecasting over $12 billion barrels a day going forward in 2019. And I just don't think the world's going to need that kind of demand.